Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's Supply and Demand Forex fundamental and technical analysis. If you're new, welcome, and if you're returning, also a warm welcome to you. And if you find my analysis of use every week, don't forget to like, subscribe, and share with your fellow trading colleagues. So, starting off on the fundamentals and risk sentiment, as we always do every week, as fundamentals and risk sentiment are the drivers of price, and it allows us to determine whether we should be buying at demand or selling at supply. And the UK economy's 20% record plunge adds pressure for more aid. So not good news for the UK economy. Really bad news, worse than expected, which is now prompting the Bank of England to take further action, Bailey says, and the Bank of England is poised to inject more stimulus into the economy as it recovers from the coronavirus pandemic, according to Governor Andrew Bailey. They really are now forced to, because the economy is, as we know, worse. Data did come out worse than expected, so there's talks of negative interest rates. There's been talk of it anyway, and now the data that's come out from an economic perspective is really forcing the Bank of England's hand to have to introduce stimulus first of all, and also potentially cut rates further into potentially the negative territory. Not saying it's going to be anytime soon, but that's the path that they are potentially on. So not good for the pound. So there's a trade idea right there. The Federal Reserve came out. FOMC was dovish. Powell sees Fed keeping foot on gas until jobs come back. So pretty much all central banks are implementing measures to really kind of combat the coronavirus and get the economy back on track. And again, the Fed are also just basically saying that they're going to be continuing to add stimulus, but they are not at the moment thinking about cutting rates into the negative. So there is a bit of a divergence there between the central bank policies, between the Bank of England and the Federal Reserve. And a beneficiary of everything that is going on currently with regards to all the money printing is that gold futures climb on Federal Reserve view resurgent coronavirus concerns. So central bank pledges to keep interest rates low for longer, and concerns grow over the possibility of a second wave virus in the US, and really I think around the world. So in times of crisis, money tends to move into safe haven assets. One of those safe haven assets is gold. So potential, again, trade idea right there for you. This is not a recommendation to buy or sell. I'm not a financial advisor, but I'm just showing you how I go about deciding which direction I should be trading when it comes to either currencies or the metals or any other asset. It's the fundamentals and the sentiment that really drives price. Moving over to Europe. So European officials fire first shots in debate on future stimulus. So the European Central Bank added stimulus last week, and so there is really discussion on the future of the further stimulus that is going on. Usually stimulus tends to or should have the effect of weakening a currency, and but with the euro it actually had the opposite effect. So the euro rally shows signs of fatigue on a risk of second virus wave as well. So there's risk of sentiment coming into the market, and I'm going to show you I'm really going to break down a euro dollar trade that we took in the group this week, and quite a few traders ended up making quite a few pips off of that as well. And I'll really break it down for you, supply zones and the rest, and some other factors as well. So shorting the euro was one of the things that we were doing this week, and the rally really, which in my opinion shouldn't really have occurred, but it just gave us a nice shorting opportunity when it was rallying Yeah, and we'll go over that trade anyways. So moving on to this week, tradingeconomics.com. In the week ahead, COVID-19 will remain in focus in the US and around the world, really, as concerns about the second wave of infections are growing, as several states are reporting an increase in new cases after easing the lockdowns. Also, investors will follow US Fed Powell's testimony to Congress, European Council meeting, and monetary policy statements from the UK, Japan, Switzerland, and others. So other important releases include China retail sale and industrial output, UK jobs reports, retail sales, and inflation data. So there's quite a lot of data coming out. The important news really being the what the central bankers are talking about, and anything to do with the economy and inflation, and as well as jobs reports as well. Even though everybody is in the same kind of boat. So gold enjoys first weekly rise in 4, so it's starting to take off, potentially a gain, especially now with the second wave potentially now affecting the world. So let's move on to now the technicals, and we start off as we usually do on the dollar index. And the dollar index really was pushing lower. It had like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of bearishness into a nice demand zone, and we had also the confluence of some support here as well that had been used in the past. I wasn't really a buyer of the dollar until this week for certain reasons, which we'll get into when we get to the euro dollar trade. And so this week we were really, I say this week, but in the previous week we were in the group, we were buyers. We were looking to get buying on the dollar. So if you are looking to buy the dollar and you're looking for the confluence of the Dow Jones Dollar Index, on currency pairs, what you want to do is look for any kind of strength on the dollar index, as it's a measure of strength against the Australian dollar, the pound, the yen, the euro, I think as well. Actually, yes, I think, but it definitely is. And yeah, so if you see bullishness here, right, then you want to get long on other dollar crosses. And if you're seeing some bearishness at an area of potential supply, then you can use that as confluence for any dollar sell trades. So at the moment, the dollar is in a decent spot for a buy. Again, that's not to say that prices are going to go higher. It just means that right now we've had this bearish, 10 days of bearishness. We would do at least some sort of pullback. And if you do want to be a buyer of the dollar, then just look for either some bullishness to continue or a pullback into a zone for that that type of confluence. Moving on to the dollar yen. And the dollar yen this week, really again from a risk off perspective, the Japanese yen should be the one that strengthens, and what we saw is pretty much good, 4 days of bearishness, and then seen a bit of a dollar strength come into the market. Could be some profit taking as well, but again from a risk off perspective, really the yen should be the one to buy, as it is a safe haven currency. So new supply zone there, and what you want to do is potentially look for, if you're looking to trade risk off, then you're looking for a pullback into that area there before looking at getting short. If you're looking to get long on the dollar based off of either some profit taking or more risk on sentiment, then now is pretty much the opportunity to look for some potential long trades right there. And if not, then I think this area below the lows is technically really nice. It's a very nice zone here. It's known as what I would call a capture pain relief zone, demand zone here. So again, if you want to get long and the fundamentals are in your favor, then that is a very nice zone too. Dollar Swiss. So dollar Swiss again selling off due to risk off sentiment, and then we've had some bullishness on the dollar. And again, the Swiss franc is a risk off currency, so it tends to strengthen in a risk-off environment. We can drag the supply zone down to here. So now what we're looking for potentially for trading risk off is a move back up into this supply zone before looking at getting short. There are some confluences in this zone as well. You've got a bit of support and resistance within here. So you've got support and resistance, so support should turn to what? Resistance within that area of supply. So if you're looking for short trade, that would be the area around this 96-cent round number. And also if you're looking for a buy trade, I think prices have gone a bit too far to look for buys, so currently, so you're looking for probably a bit of a pullback into a demand zone before looking at any kind of long trade if you want to be a buyer of the US dollar. Dollar CAD came again down to a really nice area, a nice fresh area of demand, and literally pinged off the underside of that. It was really nice trade that blasted through that supply zone, so we can remove that from the chart. So again, if you want to be a buyer of the dollar, you're looking for a pullback into that area there. If you're looking to be a buyer of the Canadian dollar, then you're looking for a pullback into that supply zone there, and then looking for short trades within that area. Those are going to be the first two areas to look for buy or sell trades going long or short. New Zealand dollar, US dollar, and this area here, the supply zone didn't hold, and it also didn't quite come up into this supply zone, but what it has done is it's created new supply, not the strongest area of supply just yet. We want to see really prices kind of move further to the downside before considering that as a really good area of supply. But if you do want to get short, it is a viable zone. I'd probably say the area, you know, a bit above that is probably a better area to look for any kind of short trades if you're looking to get buy the US dollar. From a long trade perspective, really the only zone at the moment is going to be a pullback all the way, a deep pullback down into this demand zone. If you're looking to trade the immediate trend, you're looking for that deeper pullback into this zone here before looking at getting long. Pound dollar, it's a pound dollar, bit of a sell-off, so it's created a bit of a supply zone right here. So if you do want to start to look for some short trades, what you're actually looking for is a pullback into this zone. Again, it's not necessarily the strongest area of supply from a daily perspective, but I like it from an intraday supply zone perspective. If you want to get short on that, and again with the British pound potentially going into negative interest rates and adding more stimulus against the dollar, that could be a decent shorting opportunity. If you're looking to buy the pound at the moment, you're looking for moves, the price to really come back down into this demand zone here before looking at any kind of long trades. And euro dollar, now we're going to break down really kind of the process of how we ended up getting some of the students end up getting short within this area here. And that's not to say that you know, is this I call trades, but I'll break down really what had happened. So first things first is that we were looking at our fundamental analysis spreadsheet, and a fundamental analysis spreadsheet really indicates strength and weakness of an economy and the currencies depending on how a country does as far as its economic and monetary policy standing. We give it a ranking. So this is based on, you know, data. So the dollar was number 4 and the euro area was number 7. So 1 being the strongest, 8 being the weakest. So 4 was stronger than 7. 4 was higher than 7. So we were looking at buying the US dollar over the euro. So that's based off of the fundamental data points that we use to determine strength and weakness. Secondly, what we were looking at as well is the COT, commitment of traders, and we look at the commercials, so what the commercials are doing. And the commercials over a 52-week change period, we were looking at the dollar index, and what we like to see is strong buying or a strong increase or decrease in longs or shorts. Now the commercials had increased their net long positions by 21%. We normally look for at least maybe something like 10% and above, but this was 21%. So there was definitely a lot of a net buying, a net increase of 21%. So we were looking for the buy trade along with the commercials. A lot of traders look at the large speculators, but we look at the commercials for our turning points. And also from a statistical perspective, we also had on the trading economics data forecast, where you've got the mean and you've got some variance bands. Whenever prices do come out of these bands, you tend to get a reversal in price. So in March, we had price really come outside of these variance bands, and then prices ended up reverting back to the mean. And again, the same thing happened here. So you get a nice buying and selling opportunities. These opportunities don't happen often, maybe twice, 3 times a year. But with the extremes of the coronavirus, you're getting these probably a bit more than normal. But so there was nice buying opportunity there, nice selling opportunity there, and prices came outside of the bands again. So prices don't tend to stay outside of these bands for too long, and if they do, you tend to get a reversion back to, again, what we know is fair value or the mean. So prices were outside of their bands, and so that adds extra confluence. So moving back to the charts, we were looking at a shorting opportunity here. So how to get short in here, and one of the ways that we were looking at getting short was through a technique we know as stop hunting. So on the day, and this is, you can go to June 10th at 1917, 17 hours PM British Standard Time. I posted this in our Discord group, and we were looking for a particular stop hunt setup. So this is what we were looking for. All right. So some of the traders in the group actually ended up getting involved in those, and these are some of their posts. And we can zoom in a little bit on some of these. So again, we saw the level. We were already in a supply zone. So remember, we were in that daily supply zone looking for short trades. And so this was from one of the traders where he had got in on. Really nice setup, looking at that from an hourly perspective. And again, one of the traders were looking at the 5 minute to get involved in his 2 positions. He got filled, I think, on 2 of these positions on a pullback, and really did quite well out of this trade. So well done to the guys that ended up getting involved in that. And as we see, if we look at the actual chart, we can actually go to a 5 minute chart. What you'll be able to see is this is where the actual level occurred. So this is where we were looking at. That was the actual trade. So traders got involved up here, right here, and around this area here, with a stop loss maybe around about 10 pips above the high. So if that was 22, somewhere around here, 32, and a really nice risk reward trade right there. Really nice risk reward trading. And that is pretty much how traders got involved in that. If you do want to learn how to trade stop hunts and supply and demand and capture pain relief, you can go to trading180.com. The link is in the description box below. So let's go back to the actual chart itself. So really nice trades there from for the group, and several traders in the group who took that. So where are we at now? What I'm going to do is I'm going to move this up to here, because we've created a bit of a lower low there with this bearish candle. So what you're looking for, if prices do pull back up into this zone, is looking for either a short trade there or a trade up into a fresher area of supply if you want to get involved there. If you do want to be a buyer of the euro, then there is actually hidden demand right there. Hidden demand. So, and also I have a free course. If you don't understand what hidden demand is and how to draw hidden demand, the free course will basically show you how to draw hidden demand and trade these zones as well. So those are pretty much your options. If this really kind of breaks down, this demand zone breaks down, then the nearest area then is going to be down into this demand zone right here. So looking for some potential continuation to the downside for those traders that are in shorts there. Moving on to the euro yen, and euro yen again, really nice trade. Nice fresh area of supply here, and several traders got involved in this to the downside, several hundred pips, with risk off as well coming into the market. Second virus potentially hitting the market. The yen tends to do well, so here we've got a nice actually that closed bullish. It did close on this chart, so it closed, there was a bullish close there. You can see where this blue, so bullish candle close, so that's where the supply zone is now, and what you're looking for is potentially for prices to come up to this area here before looking for shorts if you're trading risk off. If you want to be a buyer of the euro, then you're looking at really that area there to be the area for a nice long trade, nice technical level, but it depends on whether it will get down there, and you want to be a buyer of the euro. Aussie dollar, so Aussie dollar, we've got a bit of a sell-off there from a longer term supply zone up here, so eventually it did sell off. Get rid of that, and what I'm going to do is I'm going to draw another supply zone from here to here, so that whole area, let's see, why won't it turn to supply, template supply, right, there we go. So again, what you're looking for potentially now is a pullback into this zone if you want to get short and buy the US dollar. If you're looking to buy and really, you know, trade this ride this trend up to the continue to the upside, then you're buying the Australian dollar. The Australian dollar doesn't do well in a risk-off environment typically, even though it has been doing over the past few months. But if you do want to get involved in the trend and buy the Australian dollar, that's going to be the first area to look for some long trades. Moving on to the Aussie yen, and the Aussie yen, again similar to the Aussie dollar, had a decent supply zone, nice fresh area of supply. Prices literally came up to here, pinged off it, and started to sell off. And again now, potentially with the second wave taking hold, this could be a decent trade if you got into the short side, a nice potential hold. Again, if you are looking to get short, you have to wait for potentially a pullback, or you're looking for prices to make lower lows, lower highs, and a pullback into a supply zone like that. That's really where you're looking for your trading opportunities. If you are looking to buy the Australian dollar, then this is going to be the first area to look for a buying opportunity, to buy the Australian dollar. And the gold, so gold trade, again, fears coming into the market this week, but this was a decent buy for gold. We had nice resistance, support. So within this whole demand zone here, this area was really nice for a potential buy trade if you got involved in it. And now we're up into here, into this supply zone. So what you are now looking for, if you are looking for buy trades, I would say this level has been touched several times, so I wouldn't necessarily look for any kind of buy trades there. It would have to be just below that into a fresher area of demand before looking at getting long. If you're looking to get short, again, I think the best area to look for short trades is going to be if prices can get up here. That would be it. But remember, just keep in mind that gold strengthens in a risk-off environment, and if you believe that you're in a risk-off environment, then shorting may not be the smartest move to take. Anyways, guys, that's it for this week. I do wish you all stay safe and have a great trading week. Take care. Hi traders, if this video content resonates with you, why not access my complete supply and demand Forex trading course for less than £1 a day. There is a selection process as I only want to work with hardworking and dedicated traders only. If selected, you'll also get access to the Trading 180 Discord coaching group so you can earn as you learn, receive trade setups, join the weekly live video conference call and get advanced fundamental and risk sentiment analysis so you can make the best Forex trading decisions. Find out more at trading180.com. I look forward to working with you.